Well, great. First panel after lunch. Hi, everyone. Excited to talk to you on a very timely topic. My name is Kathleen Wrynn. I work at JPMorgan Chase in Global Technology Strategy, focusing on blockchain, supporting our Connexus blockchain business unit. Maybe just to kick things off, we could do a quick round of intros. Omar, over to you.
Cool. I'm Omar Azhar, head of business development at Ava Labs, the company behind zkSync. It is a layer 2 scaling solution for Ethereum, specializing in the use of zk proofs for scaling, offering both public as well as private and permissioned L2s with interact.
Hi, I'm Rob Viglione, CEO of Horizen Labs. We're big in the privacy space, so we're core builders behind zkVerify, which is a modular chain for zk proof verification. And we're also core builders behind Horizen, which is a privacy layer, actually launching on top of Base in a Coinbase ecosystem.
Guys, who's excited to talk about permissionless versus permission blockchains?
Yeah.
Is the versus supposed to be?
See number of hands.
We're on one side or the other?
I'm Wrynn Krupetsky. I lead institutions and capital markets at Ava Labs, which is associated with the Avalanche blockchain network, which, for those of you who aren't familiar, is a network of customizable and natively interoperable layer 1 blockchains.
Hey, my name is Joshua Lim. I run markets within FalconX, which is a large global prime brokerage and trading firm. We provide a lot of services to crypto native market participants, as well as like more traditional players, and obviously interact in both the permissioned and permissionless space.
Great. Well, so as you can see, a very good mix of panelists. We're here to talk about permissioned versus permissionless, how enterprises will move on chain. So obviously, there's been a ton of activity in the past few months from an enterprise perspective, and we're here at ETHDenver. So there is a range of DeFi native to really traditional institutions that are here. But really, I think it's helpful to level set first. So maybe Omar, how would you define enterprises?
Enterprise and institutions, I guess. Okay. So from a protocols perspective, it's what are they looking to do with blockchain technology? So I generally bifurcate it into two different types of institutions or enterprises. One is they're either looking to take part in the blockchain ecosystem and the overall GDP and the economy gets being built on chain, mostly in the public blockchain space. So this would be things like VCs and funds looking to invest. Then they also have the asset managers who are looking at the capital markets within the crypto world as potential customers and clients for tokenized RWAs, etc. And then you also have the other side, which is also very interesting, which is more just like, hey, this is just a better paradigm for how we do things in general, right? This is where I think a lot of the existing banks and a lot of the more regulated institutions generally are, that are looking at, hey, let's move off of our existing, rails, which can have long settlement times, etc., to something blockchains more atomic, much faster. So that's kind of how I generally look at institutions. It's what are you looking to do with blockchain? Is it more of a technology upgrade for you, a better way of doing things? Or is it, hey, there's a whole new economy and a whole new GDP, and I'm trying to invest or move money around, et cetera, in there?
That sounds great, and it makes a lot of sense and a great way to look at it throughout the course of this panel. I mean, the second part of that is, Morgan, I guess from your perspective, when we think of permission versus permissionless, what does that mean? And are there middle grounds?
So I think when you talk about permission versus permissionless, just the core definition is a network permissionlessly validated, meaning can anybody spin up the validator and validate transactions on the network? That's one consideration. That's like the definitional consideration. But then obviously in terms of you think about enterprise adoption from a permissioning standpoint, there's also multiple levels of permissioning, right? You can have permissioning at the token level or at the wallet level or at the application level, even at the chain level with respect to permissioned, beyond permission validator sets, but also permissioned smart contract deployment, permissioned flight transactions. So I think there's multiple layers. When we talk about we have the debate of public versus permissionless or permission versus permissionless from an enterprise standpoint, I think just to level set, the question is enterprise adoption as it relates to the enterprise chains historically, as we've called them, the R3 quarters, the hyperledgers that are kind of considered more isolated networks, not natively interoperable with each other, and don't necessarily benefit and reap the benefits of public blockchain infrastructure. So DeFi innovations, native integrations, whether it's oracles or stablecoins, liquidity, and users. So when we talk about this debate, I think that's really kind of the crux of the discussion.
Yep, makes a ton of sense. So I think we have now set the stage. We have a very clear understanding. I think I may be echoing a little bit. I guess Bye. I guess, Rob, from your perspective, what key factors, I guess, should enterprise consider when moving on chain, and how does like permission versus permissionless impact that?
Yeah, I think, okay, yeah, it works. So from my perspective, guys, I think the best analogy is, and you may have heard this already, when the world of networking first came about, a lot of companies, a lot of enterprises thought networking technology is pretty cool. We got to get into it. And the way they got in, they set up their private intranets. And then they realized pretty quickly the public internet was where all the action was. That ultimately, they could have their own private databases, their own internal processes, but at some point in their business processes, it made sense to intersect with the rest of the world. We have exactly that same analogy here. So we had, Corda, you have private blockchains, private instances of DLT, and that was all the rage years ago from organizations that realized this technology is really interesting. We have to get involved somehow. But I think they rushed to get involved the wrong way. So the message that I'll have is somewhere along the way, if you're going to get into this industry, you're going to use this technology, it has to intersect with the public Web3, right? One way or another. You can use validiums on the background. You can have private data that you're generating proofs on. But at some point, you're either trading a public asset, you're trading a public stablecoin, you're issuing an asset on some public piece of infrastructure. You're doing something or settling somewhere like on Ethereum, like at ETHDenver, we should be talking about. But that's the way I look at it, guys. So you should really be looking at leveraging the power of public Web3 and not just using the technology for the sake of using the technology.
Definitely. That ties back nicely to the prior panel as well, talking about using private smart contracts on public networks. I guess, Josh, from your perspective, you kind of span the gamut, Falcon X, between the more DeFi native and then institutions as well. I guess, what are some common hesitations you hear from enterprises wanting to engage on blockchain?
Yeah, I think I'll answer this question more from like a trading perspective, right? The reason that people like interacting in public blockchains and like sort of globally available, the globally available DeFi ecosystem is because they're tapping into like potentially what is the cheapest source of financing in all of crypto, which is basically like retail capital, right? And like in many things in crypto, that's both like a feature and a bug, right? The bug part is obviously it's like the pricing of risk is not entirely efficient when you kind of leave it in the hands of retail users. Things like, for instance, pricing on yield, right? Like yield in different sort of lending protocols, or the sort of segmentation of like credit risk between different tranches of exposures and different type of credit protocols. And I think that sort of thing is like evolving over time, where a lot of the things that look a lot like securities or things that require like more identification of who the shareholder base is so that you can properly attribute like cash flows and things like that are moving more towards the enterprise side of the world and permission blockchains. So there's a very close tie. I think if you look at the spectrum of things that are like closer to Bitcoin, which is basically like basically crypto native money, right? And then on the other side of the spectrum being things like treasuries and sort of like equities, things like that. That's kind of the breakdown in my mind of what lives on what kind of chain. The more something becomes like a bearer asset, and the more something becomes like a something that doesn't require any sort of, it's more like a transactional payment rail or some kind of score of value that is like more like gold. Lives in a public blockchain, and more people can interact with it, and that's actually inherent to the types of assets that have that property, right? It needs to be sort of universally accessible, and that's what you want in a store of value. You want something that has ubiquity. So yeah, that's the distinction I think in my mind, and most firms are going, in my head, most firms are going in the direction of like permissionless to get broad distribution to more retail users.
Definitely. Universal accessibility also, pivots nicely to interoperability. I guess from my perspective, Omar, how important is interoperability between different blockchain systems, and especially, how is permission versus permissionless impacted by that?
I would say from a tech standpoint, I think interoperability is probably the last place that really we've, as an industry, has come up with a really good solution for. There's plenty of good solutions for scaling. We're starting to break into the privacy. Interoperability still seems to be the hardest piece to solve. And I think a lot of it just comes down to different institutions, or like you have how many different L1s and L2s now. and being able to move assets between them, you're making some sort of trade-offs either between security or capital efficiency. So being able to, let's say, you and your, like, let's take FX, for example, the whole FX transaction, let's say from moving money from Brazil to even the US, there's probably 5 different institutions involved, including a central bank, corresponding banks, etc. And that is a modern day interoperability problem. If you try doing that within blockchains, it's also a blockchain interoperability problem because not all of them might be on the same network. So they might not share the same interoperability standard. But I think that is an area where whoever can come out with a really good design and a solution for an interoperability solution that still allows sovereignty between different independent chains, still allows you to customize your chain between private versus public, permissioned or permissionless, that is going to be potentially like the winning design overall. I think as we start coalescing towards, the whole app chain or multi-chain thesis, but there needs to be some sort of interoperability standard between all of them for it all to work. Otherwise, we're just recreating the same thing we have right now.
Yep. Don't want to do that. And I guess on that point of trade-offs, all are familiar with the blockchain trilemma with decentralization, security, and scalability. I guess, Morgan, from your perspective and anyone else as well, how do you see that enterprises should look at that and balancing that?
Sure. So I think from an institutional standpoint, in terms of when they kind of consider leveraging the technology as a way to upgrade legacy infrastructure, 2 things that I think they definitely won't. I mean, I was going to ask you to confirm this, but I know you can't give your opinion. But I think 2 things that they won't give up on is security and scalability, especially when they consider how their systems run today versus considering leveraging the technology as a way of upgrading it. Like, those are 2 things that I think from a risk and control standpoint, they won't kind of compromise on.
Completely agree.
And so from a decentralization standpoint, I think that's relatively less important. But I think especially when you're considering having multiple banks or multiple asset managers leverage this technology, they don't necessarily want only one of them to own it. So decentralization, to the extent that maybe a consortium of banks or asset managers who's already part of the SWIFT network or who have some kind of industry ownership, kind of translating that ownership model into a consortium type validation model or business model, it might be more palatable, where you're not fully decentralizing it from a permissionless validation standpoint, but it's not just one entity that owns it, and trying to get everyone to kind of use that entity's solution is kind of that middle ground that I think a lot of them will gravitate toward.
Working together for more collaboration and kind of standardization across the board. Yeah, definitely. Anyone else have thoughts on that?
Yeah, I mean, I'll just say decentralization for what? So I'm an old Bitcoin guy and, cypherpunk wannabe, right? So I think we should care about decentralization. To me, it's kind of an ideological thing, but what we've realized in our own product development is, again, decentralization for what? What's the product? What's the function? And we even had one product early on that we called it like pretty good decentralization, right? Because, kind of like an ode to, PGP. It was, okay, decentralization for what? And like, how many nodes do you really need that are completely independent to achieve your goal on the product level that had credibility for decentralization? I do think that it's something that we have to, as an industry, push forward. And there's certain classes of technology that lend themselves well towards decentralization. And yeah, I'm the zkVerify guy up here. So I'm going to say ZK proofs and zero knowledge cryptography, because you actually don't have to give up on that trilemma. You don't have to give up security for decentralization, right? So I think, focus on ZK where you can, as projects, as investors, as institutions, especially when you want to get information usable or useful on chain. Even if that information is in a private database, you generate proofs on it and get that on chain in a way that's actually credible, even if it's not completely decentralized on your own infrastructure.
Yeah, there's one thing that I would agree with him on that. Like, decentralization is a must at, let's say, the base layer. Something like Ethereum or something like Bitcoin, the strength for them is the fact that they're so decentralized. However, if we do think that the app chain thesis and chains are going to become easier to manage, run, interoperability will have to be solved, then do you really need decentralization at every single chain? Or do you just need a way to verify that every chain is doing everything correctly? And then your main base layer is fully decentralized. So that's another way of thinking of it, as well as, I can have 20 different apps. If I'm a large institution, global institution, I might have 20 different app chains broken out by region or business line, etc. And I don't really need to have them be decentralized. I'm the sole sequencer running for all of them. But everyone outside can verify that, hey, I'm not doing anything incorrect, because, once again, you're validating it through like zero-knowledge proofs or something.
Yeah.
Josh, please.
I just want to say, like, I think the power of centralization and sort of permission structures is obviously like efficiency, right? And that's always been a trade-off. You mentioned the trilemma that we see a lot in trading world. Like, you see systems like Hyperliquid emerge, where it's sort of like you're trading off some of the decentralization to get more performance. And that's also a trend that's happening in other sort of like sectors in crypto. If you look at Bitcoin being wrapped in like an ETF wrapper, right? Like ETFs and equities are in a way a private, not a blockchain, but it's sort of a database system that's like fully centralized, right? And that's sort of powerful because it's accessible to more traditional market participants who care about KYC and care about identity. So that's always like a force in crypto that pushes towards centralization. I think the power of the decentralized side of things is obviously like what I mentioned earlier, the fact that you need to have a form of payment that is not censored and like uncensorable by definition, to create like global commerce, basically. And so that's the part that's always going to persist in my mind.
Yeah, to double click on that, I guess, Josh, what are you seeing from a decentralization, permissionless perspective, the potential for network effects from operating that format?
Sorry, repeat.
Oh, what do you see the potential for network effects from operating more decentralized or permissionless framework?
Oh, sure. So maybe like a couple of really cool examples from this year, right? Like, one is just like the Trump meme coin launch, right? Something like that, where you have a global event that is accessible in a very short time frame to a lot of people. Like, obviously, you couldn't onboard like 500,000 new investors in a single day through some centralized platform and have them all go through KYC and everything like that. And just look at the stark difference between like Trump meme coin and World Liberty Fi, like the fundraising that required full KYC, and like just the difference in participation globally and the amount of money raised. That's just power of working in decentralized systems.
Definitely, that sounds great. And I think that also a lot of this comes down to, when it comes to adoption, is real world use cases. So maybe if each of you can share maybe one example that you've seen as successfully implemented, either permissioned or permissionless enterprises adopting blockchain, and maybe just why that was impactful to you. I don't know, Omar, if you want to start.
Yeah, I guess one recent use case is in Buenos Aires. Now they use a decentralized identity platform called Quark ID, where essentially the government holds in their own servers your citizen identity and documentation, so your driver's license, birth certificates, etc. They have a global, like Argentina is unique. Countries in Latin are unique in that in Argentina they have essentially a MIBA app, right? My Argentina. It pretty much is like your access to government facilities, etc. And through that app now, you're essentially just verifying your identity. Where you can go wherever. You can verify it with the authorities, with the different banks for KYC, etc. And all that verification is mostly just done on chain. And so this prevents essentially your identity data from permeating across through different private servers, and like we have right now. And it essentially is giving ownership of your identity back to the ordinary citizens. So I think right now they've got out of the maybe 30% of the population, so about 400,000 people now have their full identity, their driver's license, day to day. They're using it, and it's eventually going to be passed around to other geographies within Latin America as well. But it's a non-financial use case. But by moving your identity verification, you as a citizen on chain, it opens it up to financial use cases for others to leverage, right? Like, I know that this is who you are, and like it prevents a lot of fraud, etc.
Especially with identity being a core missing piece. That's a great.
Yes.
Rob, how about yourself?
Yeah, I'll state the obvious, guys. The killer app for crypto this year, at least is stablecoins. So stablecoins are totally crushing it. I think institutional adoption's huge. I was just listening to a podcast the other day from the founders of Stripe, and they just acquired a company that was basically this stablecoin, the Stripe of stablecoins, right? So I think just the adoption there is just remarkable with how quickly it happens and like kind of the depth and penetration of it. But I'll say going one step further than that, the use cases that I want to see proliferate are going more generally private DeFi. So I think DeFi getting out there and adding privacy layers to it so people can actually interact on chain in privacy preserving ways is ultimately going to be the next really big important step. And like I think that we can actually replicate a lot of what the financial world, the TradFi world does on chain in permissionless, privacy preserving ways. That's the next big push. And like as an organization, we're going to be focusing there quite a bit.
Great. You stole half my answer. So I think just to take that a little bit further from a stablecoin standpoint, like the quintessential example of what we've seen with enterprise or institutional adoption is asset managers launching tokenized money market funds that are permissioned at the token level and issued by a permissioned application, i.e. securitized Republic, so on and so forth, right? They're registered broker-dealers, launching and tokenizing their money market funds, and then seeing the innovation of that translate to permissionless usage via stablecoin providers. So having stablecoin providers use tokenized money market funds as collateral and then translating it to the issuance of public permissionless stablecoins and really seeing that proliferate in the world of on-chain DeFi, on exchanges, so on and so forth, is probably a quintessential example of why institutions would want to leverage public blockchain infrastructure, right? Because a lot of them look at this 200 billion in stablecoin market cap on chain today, not bearing any yield. And so where are you going to issue your money market fund? It's probably going to be where those users and where those tokens fly.
Yep. And the utility that brings. Absolutely.
Yeah. I mean, I'll take a different tack here, which is basically, I think there is an important feature of being in a permissionless system, which is basically that you have a lot of composability across different protocols. And that power, I think, is something that's very hard to replicate with permission systems because each system might have a different set of permission users, obviously, and different liquidity providers, different people pricing risk. And so you end up with very different prices for the same type of risk exposure. So I think one thing that we're seeing in the trading world is just like the fact that there are many more cross-chain bridges, more efficient ways to move money and sort of ways to transform capital and make it more portable. Like a really good example of this would be Athena, right? Which is basically like taking capital that would normally be stuck in a basis trade on a centralized exchange and having it be transformed into usable collateral in DeFi. That's kind of the power of this idea of like everything being sort of permissionless and having cross application access. And obviously it's very powerful from a developer perspective too, right? You don't have to ask for permission like you would for Stripe, right? If I wanted to integrate with Stripe, I would need to call up Stripe directly. Whereas in a permissionless world, you can just sort of do what build the applications that your users want, basically. So,
yep. And I think each of your companies, have worked with enterprises and integrating solutions. I guess what integration challenges have you found, and are there any best practices or strategies you found to work well with helping them onboard and deploy their solutions?
I would say that an interesting one would be trying to integrate the wallet and smart account infrastructure with existing IT infrastructure and permissioning as well. Like imagine if you could have like you have a permission chain for some sort of multi-bank trading system, right? And you want to tie in the risk limits to each of the smart accounts that different traders would be able to sign on for, and also put in multi-sig so that like their risk officers are signing on, or maybe someone else on the desk also sign off, and then integrating that with other systems within the bank. Those are actually pretty hard to do because I actually have to create almost like new Oracle systems, right? That don't necessarily exist. But I think that if you can break into that ground, then you can like really integrate like all the different types of trading systems that banks have right now these day and age.
Yeah, I'll put out kind of a call to institutions out there just to go bold, go a little bit bolder. So the regulatory environment as of a couple months ago has completely changed. And I would say lean into that, leverage that. So what I was going to say, kind of friction is traditionally our industry and my company, we would work with like the small innovation team in an enterprise, and you would get like a POC going, and maybe POC will end up going nowhere. So now what I would throw out there for institutions is think a little bit more deeply about that and a little bit more boldly. And instead of just having these little isolated kind of innovation budget driven POCs and experiments, think a little bit more how you can actually get more of your business on chain in a direct way that's more enduring.
Yeah, so I think definitely post election, there's definitely a renewed sense of excitement around leveraging public blockchain infrastructure among like regulated financial services institutions. But a lot of the kind of misconceptions that we've historically had to deal with are kind of demonstrating and explaining and educating to institutions that the options actually aren't just public permissionless and private permission / enterprise. 7 years ago, those were the only options you did have. And since then, you've definitely seen the advent of networks and systems that kind of provide the best of both. So a lot of it's just been education to talk about how you can still kind of own your end-to-end blockchain environment, ensure regulatory compliance, so on and so forth, but be part of a network where you can benefit from a lot of the public permissionless liquidity integrations, innovation, so on and so forth. So just a lot of it, just continued education.
Yeah, makes a lot of sense.
Yeah, I mean, for us, our customer base is almost entirely crypto native. So it's not a question, right? The question is like, how can we avoid these sort of like regulatory overhead of full KYC and permission structures, and not avoid, but at least like move in a direction where it's more accessible to a global market. And so, yeah, I think a lot of the innovations that we've seen in the last couple of years have been like the streamlining of like KYC, KYT software. Almost every trading firm in crypto now is active in DeFi, even if they were sort of like highly regulated in some way, like, the Chicago prop trading firms or, hedge funds in New York. Like everyone is sort of like trying to figure out ways to access the permissionless world. And in a lot of ways, it's become much more efficient because of that. Like you can have systems like Hyperliquid exists where it's like relatively efficient pricing between that and Binance because people are arbing that out. So it's great to see. And it just opens up like a whole different market to retail participants all over the world that otherwise wouldn't be able to access it.
Great. So I think you only have a few minutes left. So maybe do a quick lightning round, some hot takes. I guess the first one for all of you, and looking ahead in the next 3 to 5 years, what percentage of enterprise blockchain activity do you expect to see on permissioned versus permissionless blockchains?
It depends. I think it might actually be split half and half. But once again, I'm considering permissioned and permissionless blockchains to be a part of a larger network, and they can all interoperate within them. And if that's the case, then I would probably say, yeah, it could easily be 50-50. I mean, if you think about how many private intranets exist right now, and they're still connected to the overall public internet, it's going to look somewhat similar in that manner.
Yeah, I'll just double down on that and say I think all the action, guys, is going to be on, and maybe the terminology is a little bit not nuanced because you could be permissioned in some sense where part of your infrastructure or your kind of public-facing stuff does have permissions to participate. But overall, it's going to be part of this global system that Omar was talking about. It will be all connected to like kind of literally what we're calling Web3, so the public version of all of this.
I feel like none of these are hot takes. Like I agree. Same. I think it depends on the use case and the application. Like if you get like an intra-bank dealer network, there might not necessarily be reason for it to tap into or be on a public permissionless network. But I would say that probably a large percentage of enterprise use cases have a degree of permissioning, whether it's on a permission blockchain or not, but permissioning at the KYC and KYB level, wallet token, whatever that is. If it's related to wholesale banking, capital markets, it would probably have some kind of permissioning associated with it.
Yeah, I think when it comes, again, a bifurcated answer, but when it comes to like payments, I think almost all payments will transact on permissionless networks, like through stablecoins. And I think for things that look like securities and require, regulatory oversight, a lot of that will move to permission chains. But like we've already seen in more recent projects and things like that, people are launching like decentralized wrappers for those things. And so I think ultimately everything will become decentralized.
All great answers. Definitely hybrid going forward. I guess what's one thing you think is missing to really have true scalable enterprise blockchain adoption?
I think identity standards is a big one. Not just identity standards for people, but also identity standards for organizations and entities as well. Like, how do you represent them on chain? And then also just using smart contract accounts instead of like EOAs is also going to prove to be a pretty big, I think, step up in terms of adoption in general. But yeah, those are two at the top of mind.
Yeah, again, I'll be the ZK guy. So I think it'll be kind of like data compression. And like, if we're going to get a non-trivial chunk of like global commerce and activity on chain, we're going to have to do that in a much more scalable way. The basics are there already. It's just kind of a matter of improving them and rolling them out more.
I agree with the identity and the KYC standards, especially if you want to create a composable to the extent permission DeFi ecosystem. It's not the tech that's obviously a blocker, it's the standards. And that piece hasn't even been solved in the Web 2 and traditional world, right? There's a reason why all banks still do their own KYC, even though if I'm already KYC'd at Citi, I still have to KYC at JPMorgan. So I think a lot of that needs to be kind of figured out from a regulatory standpoint and then can be obviously translated on chain. More immediately, I would say a more concrete framework around stablecoin legislation in the US. I think that will really open the floodgates for enterprise and institutional adoption.
Yeah, I think a big part of the development of like permission versus permissionless stuff will revolve around like custodians that can hold assets and sort of like transform one type of asset that's permissionless to something that's permissioned, and conversely the other way around, where you have protocols that are like wrapping things that are securities effectively. So it's a lot of the regulation around that which is evolving very much in the US under the new regime.
Definitely. So I know we're out of time. So very quickly, one thing and on a positive note, what is one theme or area you're most excited about in 2025?
One theme or what? Sorry?
One theme or area you're most excited about?
I think enterprise chains coming onto public networks in their own way is going to be pretty awesome.
I'm going to say identity solutions. So kind of piggybacking on these because I think that is the next big wave.
I'm still not over stablecoins. Very excited, quintessential RWA, but I think this year we'll really start to see them being integrated with like Web 2 and traditional distribution channels and really seeing adoption grow beyond kind of the on-chain communities.
I'm excited about tokenized like hedge funds and different kinds of like trading strategies that are just wrapped in a very simple thing that retail can just access quickly.
Would they be wrapped in dollar coins?
There you go.
I'll have to look forward to. Well, thank you all so much. And feel free to talk to us afterwards. Thank you all.